Hi, everybody. This is Gary Dean, and this is our night video report for Tuesday, October 11th, 2016. So it's nice when the markets finally do what a pattern was expecting it to do, especially when it was on the downside. We've seen so many of them throw curveballs and knuckleballs and stuff like that. That we'll have to. It looks like this is playing out, and you can see this is the daily chart. So we have the bearish divergences that I've been pointing out. We're just past the neutral line, so we have plenty of gas in the tank for the bears to take it lower. But the important part is you can see it broke through this wedge right here. So this was what I was warning of because of the this descending triangle pattern, is that if we break down, we're going to break through this wedge right here, and that's pretty much what happened. So the best way that I'm looking at this right now, and I'm trying to just take a short-term view of things, and then if things turn bear ugly, just adjust them. But overall, I still believe that we're coming someplace down here before everything is said and done. That's the big picture. Short picture is just a shorter term would be that we made an A, B, and now we're making a wave C, and we're probably going to come someplace into this 2067, 2048 area. So that would make sense on that. The pattern, though, like I said, is pointing for all the way down here. So our first, say, objective right now is going to be that the bears they're going to probably come down and test this 2119. If they lose that, if the bulls lose that, then we're going to have a pretty big wash down to this 2105, and like I said, most likely coming down to the 2067. If things start breaking down there, that's when we start looking at these targets. So right now, the initial targets, the good part about this move here was that when I had sent out the short, the pattern part, we were right here, and the stop was right here. So that's the part that I'm say most proud of is for myself. I beat myself up a lot on certain trades, but this is we took I said I was taking a short position here, and my stop was 4 points above, so there was limited risk on the actual trade, and I said that the target is going to be this 2020, and you can see we came down to this 2030 level, and it was a huge profit as far as if you took that short. But you can see that really we clearly broke the the descending triangle. If the bulls they're going to have to defend this this 2120 area. We don't have any bullish divergences, and it's trying to turn a little bit, so I wouldn't be surprised to see some type of bounce, maybe back up to this 2145, maybe even come up and test the the moving averages. That would bring us back into this, but I still think you want to be shorting these. I think you want to go all the way as close as, you would just want to be shorting rallies going into the election, just because I as any bounces that we get, I believe are going to be sold off, and there's not going to be any conviction to the upside. So when they give you these gap ups of 10, 15, 20 points, you just use them to short. Now, another thing that has gone on, this is the 6th in a row, these gap ups that the bulls keep trying, every one of them is turning into a failure. And what I mean by a failure is where they gapped it up from, they took out those, that price. And you can see every single time they've tried one, they completely lost on it. And why they keep trying, I'm not sure, but they, it is something they're doing. But so right now, we're getting a little bit oversold right here. On a 15-minute chart, we don't really have that much of any bullish divergences. It's close, but we're in the second support zone. That's what I've been really what I've been following is we had our our first resistance, second resistance, and then we had our first support and second support. So we're in the second support zone. And like I've said, that really what the bears have to do is push it through this 21.19. From there, we're going to get panic selling, and the panic selling will probably take us someplace down into this 21.05, or more likely down to the 20.67 or 20.50 area. But right now, things worked. I wouldn't, we had a nice move to the downside. If it's going to make sense, A, B, and now we're making a wave C, and I still think it's here. So I would probably the best way to do it is manage your trades if you have an open short position. And if we get a bounce, look to maybe scale in a little bit more on the short side. But I would be very, very careful trading the long side, even on even if I'm anticipating that there's going to be a bounce. And sometimes you come back and you kick yourself in the butt because the bounce ends up being 20, 30 points, especially in this market, and that would be a good trade. But I just don't like the risk when I don't believe that the patterns finish, and when you have a larger pattern that's calling even lower. For me, I'd rather just sit, let them bounce. The markets look to reshort, and then start the process all over again. So with that, let's see what plays out tomorrow. Like I said, we could get a bounce. Maybe the first target, if we get a bounce, is going to be that 21.44 level, so about 8 points higher. If they can get through that, then we're looking someplace up at the 21.44, and the support level that the bulls have to hold is going to be at this 21.19. If they lose that, then we're going to get a quick move down to the 21.05 and possibly even down to the 20.70. So with that, enjoy the rest of your night, and I'll talk to you guys in the morning.